And our market monitor says big companies aren't the only ones that pay attractive dividends that grow over time. Small and medium-sized companies do too. She's Jill Cuniff, president of Edge Asset Management. Jill, welcome. Good to have you with us.
Thanks, Tyler. Glad to be here.
Why are dividends so important to you?
Dividends are a sign of a company's strength. And a company that pays a solid dividend as well as grows that dividend over time shows a commitment to shareholders. And we believe that's a big driver to total return.
It's also the search for yield, is it not, in a relatively low interest rate environment so far in 2014 and all of 2013?
Absolutely. If you think about what's happening across the world and aging demographics, yield is very important. And we're also in a very low yielding environment with interest rates. So given that stocks have run and investors are looking for places to go, dividend-paying strategies are a great alternative for investors for income, as well as the potential for total capital appreciation over time. Let's
get to some of your stock picks. One that doesn't have all that high a dividend, but is going to capitalize, at least from your point of view, on the growth in domestic energy production. Tell me about Marathon Petroleum and why.
Marathon is definitely benefiting from that theme of the U.S. energy independence. The U.S. is generating about 83% of its domestic oil needs right now, and that's going to continue. So what's happening is that production and that infrastructure around that, it needs to be built out. And Marathon, as one of the largest independent refiners, has done a very good job of capitalizing on that opportunity. They made a smart acquisition last year. They have a strong balance sheet. And the yield is about 2% right now. And as you said, that's not all that high. But what's important is that they grew it by 20% last year. So not only the yield and the good, strong fundamentals of the company, but that growth of the dividend is important to Edge.
And Jill, I'm noticing you don't always go to the larger cap companies. You look for small and medium-sized companies that, as you say, may not have a large dividend, but grow that dividend by a large percentage basis. And I would assume that your next pick, Calumet Specialty Products Partners, fits under that umbrella.
That's absolutely right, Sue. And at Edge, we look for companies that may not be tracked by Wall Street and overlooked by the average investor. So Calumet Specialty Products is about a $2 billion market cap company. And you may not have ever heard of them, but they're very good at what they do. And they make over 35 hydrocarbon products that go into things that you do know, like baby oil and cosmetics and WD-40. So their specialty and their focus really distinguishes them. And they do pay a very healthy dividend of just under 10% right now. So good, strong company and good, strong dividend. All
right, we've got two sort of oil or petroleum-based companies. The third one is anything but Alexandria Real Estate Equities. Why that one?
Well, it's important to have some diversification. And at Edge, we focus on dividend-paying strategies, and Alexandria is a specialty REIT, where we like specialty REITs versus large cap REITs because we believe large cap has been a little bit overpriced. So this is a different way to play that space. And what Alexandria does is lease lab space to people like big pharmaceutical companies or biotech or universities. And the biotech segment of the market has been on fire. So this is a slightly different way to play that space. And they've consistently grown their dividend over time.
And a yield of about 4.1%. Jill, thank you very much. Do you have any disclosures to make with respect to these stocks?
I don't hold any of these personally, but we do hold them in our dividend-paying strategies at Edge Asset Management.
All right, Jill, have a great weekend.
Thank you. You too.
Jill Cuniff, president of Edge Asset Management. Sue?